President Trump announced sweeping new tariffs, high taxes on goods entering the U.S., sending shockwaves through global markets. These tariffs, some as high as 40%, target imports from 14 countries, marking a dramatic escalation in the administration's America First trade policy. The stated goal: protect American industries and jobs by making foreign goods more expensive, encouraging companies to buy American. But this move is highly controversial. Economists warn it could backfire, raising prices for Americans and triggering retaliation from other countries. Stock markets have already dropped, and currencies are fluctuating as businesses scramble to adapt. The new tariffs take effect August 1st, giving countries and companies less than a month to prepare. India, however, has a temporary reprieve. Its tariffs are delayed as negotiators race to finalize a mini-trade deal. The outcome of these talks, expected in the very near future, will decide if India faces steep new taxes or forges a new path with the US. This is not just a policy tweak, it's a global economic turning point. The world is watching to see if these tariffs will protect American jobs or spark a damaging trade war. For now, uncertainty reigns as the deadline approaches. The stakes for international trade have never been higher. The new tariffs hit a wide range of countries. U.S. allies like Japan and South Korea face 25% tariffs, threatening their key industries. Bangladesh and Serbia are hit even harder, with 35% tariffs that could devastate their garment sectors and disrupt supply chains for American brands. The highest rates, up to 40%, target Southeast Asian economies like Cambodia and Thailand, potentially pricing them out of the U.S. market. Commerce Secretary Howard Lutnick warns more countries could be added soon, deepening global uncertainty. Beyond country-specific tariffs, the administration is targeting products. All copper imports now face a 50% tariff, and pharmaceuticals a staggering 200%. These product-specific tariffs are designed to force key industries like drug manufacturing back to the U.S. The strategy is clear: protect American jobs and industries, but at the risk of higher prices and global supply chain chaos. The world's response will shape the future of trade. For now, companies and consumers everywhere are bracing for impact. The tariff shockwave is just beginning. India stands at a crossroads. Unlike other countries, it's been granted a temporary delay on a 26% tariff as last-minute negotiations unfold. US and Indian officials are racing to finalize a mini-trade deal covering up to $200 billion in goods. India's goal: secure lower tariffs for its crucial exports, textiles, garments, leather, that support millions of jobs. The Indian government has made its final offer, refusing further concessions. The pressure is intense, with the business community and global observers watching closely. If the deal succeeds, India avoids punishing tariffs and strengthens ties with the US. If talks fail, the 26% tariff hits August 1st, threatening Indian industries and jobs. Retaliation from India could spark a broader trade dispute. The outcome will set the tone for US-India relations and signal whether negotiation can still work in a protectionist era. For both countries, the stakes are enormous. This decision could reshape their economic future. The world waits for the verdict. India's negotiating stance is firm. Some issues are simply off the table. Protecting its vast agricultural sector is a red line. India refuses to open its dairy and auto markets to US competition. Genetically modified crops are another sticking point. India won't allow US GM crops for human consumption, citing health and environmental concerns. A compromise to allow GM products for animal feed was rejected by US negotiators. These positions reflect deep political and public resistance in India, especially from powerful farmer groups. The government must balance economic gains from trade with protecting millions of rural livelihoods. India's final offer is a calculated balance, seeking access for its exports while defending its core interests. Whether the US will accept these terms is the big question. The outcome will reveal if the Trump administration is willing to compromise when faced with a determined partner. For India, the stakes are not just economic but political and social. The world will soon know if a deal is possible. The clock is ticking. Two new tariffs stand out for their potential impact: 50% on copper and 200% on pharmaceuticals. Copper is vital for construction, electronics, and transportation. The tariff sent copper prices soaring 17% in a single day, raising costs across the economy. Higher copper prices mean more expensive cars, homes, and gadgets for Americans. The 200% tariff on imported pharmaceuticals is even more dramatic, threatening to make many medicines unaffordable. The administration hopes this will force drug manufacturing back to the US, but critics warn of massive price hikes and supply shortages. An 18-month grace period gives companies time to adjust, but building new factories is slow and costly. These tariffs signal a push to reshore industries deemed critical for national security. The question, can the US adapt in time, or will consumers pay the price? The answer will shape healthcare and industry for years to come. The tariffs are already reshaping the US economy. The government has collected $100 billion in tariff revenue this year, but that money comes from importers, and ultimately, consumers. Analysts estimate the average US household will pay about $2,300 more in 2025 due to higher prices. Tariffs raise costs for businesses, who pass them on to families through pricier cars, electronics, clothing, and food. While some jobs in protected industries may be saved, others are at risk. The Yale Budget Lab projects a net loss of over 500,000 US jobs as companies that rely on imports or face retaliation cut back. Wall Street reacted with a sharp drop in major stock indexes, reflecting fears of slower growth and lower profits. The dollar strengthened as investors sought safety, but this makes US exports even less competitive abroad. The ripple effects are being felt from factories to financial markets. For many Americans, the cost of protectionism is becoming painfully clear. The debate over tariffs is no longer abstract, it's hitting home. The economic fallout is just beginning. The nation faces tough choices ahead. The global reaction to the tariffs is swift and tense. Japan and South Korea are lobbying Washington for exemptions, while China warns that no one wins in a tariff war. International organizations like the UN warn of global instability as the short deadline leaves little time to adapt. European leaders fear the move undermines decades of rules-based trade and could trigger a cycle of retaliation. The UK, with a current trade deal, is spared for now. Its currency is strengthening as investors seek safety. The message is clear. Only bilateral deals with the US offer protection from tariffs. The world is being pushed toward transactional deal-by-deal trade. The pressure to negotiate on Washington's terms is mounting. President Trump is also targeting the BRICS bloc, Brazil, Russia, India, China, and South Africa, with a looming 10% blanket tariff. He accuses them of trying to undermine the US dollar, framing the conflict as both economic and strategic. BRICS leaders like Brazil's Lula da Silva dismiss the threats, signaling growing confidence among emerging economies. The bloc is exploring ways to trade without relying on the dollar, challenging US dominance. This puts India in a tough spot, caught between negotiating with the US and its BRICS partners. The threat of blanket tariffs may push BRICS nations closer together, accelerating plans for economic cooperation. The US is linking trade policy to a broader geopolitical struggle over the future of the global financial system. For India and others, the choice between US ties and BRICS solidarity is growing starker. The world is watching to see if these threats unite or divide America's rivals. The global trade order is being rewritten in real time. As July draws to a close, the world waits for the outcome of the US-India trade talks. A deal would mean continued access to affordable Indian goods for Americans and job security for Indian workers, a rare win for diplomacy. If talks fail, tariffs hit, prices rise, and retaliation follows, deepening the global trade war. For US families, the cost of tariffs could reach thousands per year, with job losses in vulnerable sectors. Small businesses face uncertainty and rising costs as supply chains are disrupted. The debate is clear. Are tariffs a tool for national strength or a blunt weapon that hurts everyone? The answer will shape the next chapter of the global economy. The world's response to the August 1st deadline will reveal which vision prevails. For now, leaders, workers, and families everywhere are holding their breath. The future of trade, and your wallet, hangs in the balance.